All right. What is up, traders? What's up, tycoons? Super excited for today's video. We're going to be going over the Boyle cold chart layout. All right. Now, this is one of the different chart layouts that's available in the many different packages. We've got Boyle on the left here. We've got cold on the right. Now, the reason I like to use this, typically I'll be having two screens if I'm trying to trade natural gas. And I'm much more of an options trader. And so when you're trading options, things like cold and things like boil, they're inverse ETFs, right? So cold is going to be the bearish ETF and boil is going to be the bullish ETF for natural gas. And then I'll have another chart looking at the natural gas futures. Right now, I use this one to get multiple signals, right? And I tend to use it on an intraday basis for entries, and then on a larger time frame, maybe for some potential entries and signals for swings, right? We'll break down, the different indicators that we're looking at on here. But essentially we've got volume. Okay, so, volume is pretty self-explanatory. We have the momentum SMA indicator. This basically just indicates the strength and direction of price momentum. So that's going to be the second one here. All right, we've got the buying, selling pressure, volume candles here. Then we've got the momentum SMA. And so the SMA is going to be the red line here. And oftentimes when you see a cross either above or below this red line, I use this for potential buy and sell signals. Now, another important thing to put into context with this is you really want to see this above or below zero based on the type of trade that you're looking for. Now, a bullish trade, you would be looking for this to be above zero and then get a bullish crossover, right? If you take a look over here, you can see that momentum is below zero. And what do? Well, we cross above it, but we only get about 1 day's worth of bullish price action, and it's not very strong, right? Versus over here, you see we get the crossover above, and then once we come back up above zero here, that's when we are in positive momentum territory, trading above the momentum simple moving average here as well. You can do the same thing with cold. So that's something that I'll look for, right? Is I'll say, hey, you know, does this one look like it's about to cross over to the downside? Does this one look like it's about to cross over to the upside? What about the MACD, right? The MACD is going to be the next one. That is a moving average convergence divergence. This helps identify changes in the strength, direction, momentum, and duration of a trend. And really, I try to look for divergences in this as well as crossovers, And so when you see a lot of these things lining up together, it really just helps to give a little bit more confidence in a trade, in an execution, or in a move, for instance, right? Over here, for instance, we've got some bullish divergence happening. Okay, so let's go over that. What is bullish divergence, you may be asking? Well, take a look at the RSI is going higher here, making a low, higher low, higher low, higher low. We got a MACD crossover right here. And then as I just showed you guys earlier, we did get the momentum crossover first, but that's not really the confirmation that we're necessarily looking for. We want to see, yes, the momentum SMA trading or momentum trading above the SMA, but we also want to see it above zero, right? And then, we have bullish divergence here. And here we see buyers take control of the price action. That is your DMI. Okay. If you're not familiar with the DMI, we'll go ahead and break that one down next. This is your directional movement index, and it basically identifies the direction of the market trend. The way I have it color coordinated is green is basically going to represent buyers, red is basically going to represent sellers, and the blue is going to be the average. Okay, so when you see the green cross above and is the one trading on top, that lets you know that buyers are in control of the price action. And then oftentimes you'll see the blue line come on top. And this just means that the whatever the trend is kind of in control right now, right? So buyers are losing a little bit of steam, but overall they're in control because that is the new trend, right? And you can see we continued that uptrend there for a very long time. And I like to just look at both charts and, because sometimes you can see something, some people are just naturally better trading bearish setups. Some people are naturally better trading bullish setups. And if you're basically looking at both at the same time, maybe you'll identify one on one chart and then you go look at the other one and you say, oh, well, the inverse of that signal is also setting up here as well. So that's what I really like to use. You can use it to spot different divergences, as I mentioned, or buy, sell signals by analyzing the alignment of these indicators. We kind of broke down what bullish divergence is already, but we've got it written here for you guys to go back and, in case you forget, if price is making new highs, but the RSI is not, it could signal a bearish divergence and a potential sell opportunity. Conversely, if price is making new lows, but the RSI is not, it could indicate a bullish divergence and a potential buy opportunity. By monitoring all of these different indicators across both inverse ETFs, traders can gain an edge in identifying entry and exit points for trades, optimizing their strategies based on comprehensive technical analysis. So, we've also got the clouds on here, pretty self-explanatory. Green clouds is bullish, you're in a bullish trend. Red clouds is bearish, you're in a bearish trend. And that's really how I tend to use this chart, right? And the reason this one may seem a little bit more complicated to some people, or if you watch some of my trading or technical analysis videos, I really don't put this many indicators on my YouTube videos. But the whole basis of this is that some of these, natural gas can be pretty tricky to trade sometimes, right? And there's a lot of false moves or moves that you think is going to happen, but doesn't. And so by using this, when you can spot 2, right, 3, 4, right, maybe even 5 potential signals for a buying opportunity, that's really going to greatly increase the odds of your success in a trade, right? It's never going to be 100% guaranteed, but it is going to increase the odds of success, all right? Because now, rather than just buying blindly because you think that we're oversold, or you think that, or shorting because you think that we're overbought, now you have a little bit more, confluence over here and say, all right, well, maybe I need to actually look for some divergences and potential divergences, or just because we're oversold or overbought, we're not really getting that follow through on a sell signal, right? Like over here, yeah, we're overbought. Here we get a MACD crossover to the downside. Here momentum is crossing over. But all of this is happening, kind of in the pre-market here, and we're not really getting that follow through maybe that we're looking for. And you can use the DMI here as well, right? And lots of times you'll say, all right, well, I want to see, some of the indicators can be lagging, right? And we talked about how we got a crossover here, a bullish divergence here, and then we got a crossover here. One of them may happen first, right? So maybe you're looking here and saying, all right, the momentum SMA is crossing over. Let me see if I can get a MACD crossover. Let me see if there's any bullish divergence. And let me see if buyers can cross over and take control. And then maybe after you get 3 out of 4, or 4 out of 5, or maybe just 2 out of 5 different signals, then you come in and you say, all right, well, I want to take a trade, based off of this, and you define your, risk profile and risk management strategies for executing that trade. That's going to wrap up today's video. Hopefully you guys enjoyed it. Remember, this is one of the chart layout packages that, this one's included in one of the chart layout packages. There's many different chart layout packages that cover market breadth. There's market internals, all right, and much, much more. I think you guys will really love these. So there's a link in the description to purchase all of them. If you've already purchased it, enjoy this video and continue watching the rest of the videos in the packages to get a brief explanation of how to use all of them.